This is the Daily Market Comment by Rafi Boyadjian. I'm Maria Bashardis. Thanks for joining us at XM.com. The US dollar recouped more lost ground from the late August sell-off as investors grew increasingly doubtful about whether Friday's softer-than-expected jobs report would derail the Fed's taper timeline. However, even though the Fed will likely still go ahead with tapering its monthly asset purchases later this year, markets are a little more worried about the inflation outlook. Not only do supply bottlenecks and shortages not seem like they will get resolved anytime soon, meaning high inflation becomes stickier over time, but a slower recovery of the labor market might keep the Fed active in the bond market for longer, further fueling price pressures. Inflation fears could be behind the unexpected pickup in Treasury yields since Friday. But both U.S. yields and the dollar pulled back slightly in Asian trade today. Higher yields and the resurgent dollar weighed heavily on gold on Tuesday. The precious metal was attempting to reclaim the $1,800 level today, but whether it succeeds might depend on how strongly Fed officials back an immediate start to tapering. Oil prices, however, were heading higher on Wednesday, but this failed to lift the Canadian dollar, which slid further today. The Bank of Canada is expected to keep policy unchanged when it announces its decision at 1400 GMT. Although the Canadian recovery has picked up speed lately, and Friday's employment data will likely confirm this, expectations of a more cautious Bank of Canada, due to the global headwinds from the Delta variant, could be holding the Loonie back. In European currencies, both the euro and pound remained on the back foot versus the greenback. There is heightened speculation the European Central Bank will pare back its asset purchases when it meets tomorrow, but the boost to the euro has been modest. Signs that UK growth following the reopening of the economy has already peaked have been somewhat weighing on sterling lately. But there was a further blow to the pound's bullish prospects on Tuesday after Prime Minister Boris Johnson set out plans to raise taxes. However, there are concerns the tax hikes could hamper Britain's recovery from the pandemic, and this could prove to be a major drag on sterling in the medium term. This was today's Daily Market Comment. Thanks for joining us, XM.com.